Industrial production edged up in July, even as April to June current account deficit shrank to a comfortable 1.2% of the GDP. The index of industrial production rose about 4.2% in July thanks to a pickup in manufacturing activity, which grew at a healthy 4.7% compared with almost no growth in the same month last year. Capital goods and consumer durables posted a sharp turnaround, although the growth was not broad-based in the real sense of the term.
On the other side, current account deficit contracted to 1.2% of the GDP in the April to June quarter to $6.2 billion, thanks to the clampdown on gold imports and a sharp fall in crude oil prices. The April-June current account deficit is, however, higher compared to the previous quarter. The spike in industrial production and a relief on the CAD front is surely good news for the government, which is trying to put the fisc back in shape. And that's our top story on Business Tonight.
India's growth engines are slowly but steadily humming. Manufacturing has consistently picked up. Factory output for the month of July at 4.2% is moderate in comparison to the revised 4.4% growth in the previous month of June, but has been on an upward trajectory. While manufacturing and capital goods output grew, consumption failed to pick up steam. Manufacturing output that contributes over 70% of IIP grew marginally at 4.7% versus 4.6% the previous month, while capital goods growth picked up pace. Consumption grew by over 11%, but not strong enough to boost demand. Experts say while the growth in capital goods is heartening, consumer demands will pick up in the coming months.
I think it's good news. 4.2% is much higher than our expectations. So I think it augurs well for overall industrial growth for the economy. I think the capital goods numbers have tended to be volatile in the past. So while getting a number of 10% obviously means we're going in the right direction.
Meanwhile, growth stuttering experts say the time could be ripe for a rate cut.
The key thing from an output perspective should be, is there demand out there? And if demand is suffering, then one important thing for the fundamental growth of the economy is to revive that demand. And again, cutting interest rates would help in that perspective. So clearly at this point, if there was ever an opportune moment, it is now for the RBI to look at if you're looking at cutting interest rates.
Even as India Inc. and North Block are clamoring for a rate cut, the risk of low monsoon and capital exit due to Fed rate hike could play a spoilsport. And that is why Governor Rajan could err on the side of caution yet again. Priya Singh with Ruchi Bhatia, ET Now, New Delhi.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.